Welcome to Business Connections, a program put on by the Dayton Area Chamber of Commerce. I'm Holly Allen, Director of Marketing and Communications at the Dayton Area Chamber. Welcome to 2018. Many of our member businesses are getting ready for the new year, hoping for a prosperous 2018. And so every year we bring in one of our expert economists to talk about what we can expect in the coming year. So I would like to welcome Dr. Thomas Traynor, who's on the hot seat. He is Professor of Economics and Interim Dean at Soin College of Business. Thank you so much for being with me.
Well, thanks for having me.
Absolutely. You know, you come back year after year. You're so brave because we ask you some tough questions. We ask you to make predictions for the coming year, and you're always a good sport. So thank you for that.
Oh, you're welcome. It's no problem.
Well, let's get started. We usually start by taking a little retrospective look at the year that's behind us. How did we end 2017 from an economic standpoint?
So the region continued to experience employment growth and income growth. The employment growth was a little slower this year than last year. It looks like the monthly year-over-year average is going to come in at about 5,000 additional jobs for the region this year, where we were at more 6,000 to 7,000 range. So it's not too much below the growth rate that we've had in the past, and it's really not outside of the range. I would say sort of a margin of error around what we'd had in the past. So maybe at the low end, but it's okay. Industries where we sort of saw some losses. I would say, I guess I should lead by saying almost every industry experienced employment growth. So it was pretty broad-based. That's another plus. Yeah. The only industries that really had declines are retail, which is kind of expected. Retail is going through a transition as more retail trade is done online to fewer employees. The information industry, so everything from newspapers to the television media to some print media is declining, but not by much. And then, of course, I'm an employee at Wright State, but state higher education is, declined this last year too.
I wouldn't say that any of the three of those have been surprising to us. We've seen decline in information, I think, for several years, and I think we've heard terms like retail apocalypse, unfortunately, in the last year as things have moved more to online commerce. So
that's correct. Yeah, those two areas have been experiencing declines for a while, and yes, it did accelerate in retail, the decline, but it isn't. I don't think it was unexpected.
Right. So with that said, was there anything as you look back on 2017 that was surprising to you?
Yeah. So in the surprises on the positive side, I would say I thought manufacturing might grow about 500 jobs or so, but it grew by 1,000. So sort of at the high end of what you might expect. Yeah, that's good. And the private education actually grew more than expected by more than 1,500. I still, I guess I have to say I question that amount by a little bit in terms of the data collection. There's just samples used, but that's everything from private K through 12 to University of Dayton to so higher education to private tutoring, Kumon and places like that. So that's up, and so the fact that it's up isn't totally surprising, but the amount really kind of has caught me off guard. The growth there. In terms of decline, I do think that the retail decline. Yes, you're right. I've heard the term retail apocalypse too. There's an element to which, going into the year, I didn't know if it would happen this year or not, but it did. So I think we had more of a drop there than I had anticipated. Over 1,000 jobs lost in that industry.
Right. It'll be interesting to see how businesses in that industry react to that. And I know as we speak, they're looking for innovative ways to fight back against what they've seen, consumer trends. So it'll be interesting to see what they come up with and how quickly they implement it.
Right. There'll always be some sort of retail that will exist in actual square footage and people needing to visit stores. Even Amazon is starting to open their own little retail
which is interesting,
right? So yes, I expect further declines, but I think there'll be some bottom somewhere. It's not going the opportunity to go and buy goods at physical locations isn't going to disappear.
Right. Maybe just a market shift of sorts, I guess.
Exactly.
Interesting. Well, you talked a lot last year when we met. You said the words steady growth quite a bit. And I think you said it the year before as well. Would you say that that was pretty accurate? Was that the theme of 2017 again?
Yes, I think so. I mean, essentially since the Great Recession, which is, almost 10 years ago at this point, or actually technically that recession started mildly in late 2007. The real financial crisis that really worsened it didn't happen for another year. But really, since we started recovering, we've had this relatively steady, slow growth, and that's what we had again in the Dayton area, just as happened nationally. So the first half of the year nationally, we had sort of weak growth, but we've had stronger growth through the middle part of the year. And I think early indications that this last quarter of 2017 will be pretty good too. At the local level, growth hasn't been as strong as it was on the national level, but we've again had pretty steady growth. So when I mentioned, say, 1,000 jobs here, 1,000 jobs there being added or lost, just to give you perspective, we have 390,000 workers in this region. So we're looking at changes in individual industries that are maybe less than 0.5% of the total. And so this 5,000 employment growth for the region is a little over 1%. So it's not bad, not as strong as the rest of the economy, but certainly stronger than a lot of the smaller cities in the Midwest. So we're kind of holding our own to some extent, and it continued, as you said, slow, steady growth.
Seems to me that would be the healthy way to grow. Is that the way economists look at it?
Well, there's a trade-off. So yes, more rapid growth, sort of increases the risk of running into problems with inflation or overinvestment in certain industries, and that's a little less likely, but not impossible with slower, steadier growth. When unemployment's high, slow, steady growth isn't very attractive, but we don't have particularly high unemployment. I think there is room for growth in employment without it causing inflation, but we don't want really rapid growth right now.
Right. Okay. Sounds like we're on the right track. We always take a look at some of the world issues that might affect us here locally, because as we know, it's all connected when you're talking about the economy. Last year, as we sat here, we were talking about President-elect Donald Trump, and he is now our president. Can you talk about maybe how his entering the White House has affected our economy here, just overall, and then we'll get into a couple of issues that.
So there haven't been too many big policy changes in terms of policies that would have to go through Congress for approval. So just as we're taping this today, we're getting the news that Congress is passing the tax reformation bill. So that would be the main piece of legislation that's occurred. So none of that has happened in a time frame that would have affected 2017.
Right.
But the president still had the ability through executive order to change regulations. So there's been a marked decrease in business regulations over the past year. And there's been some anticipation, I think, of some sort of change in taxes and a decrease in taxes. And based on that, that's primarily affected the stock market or equities markets, and you would expect that those markets would try to react to what they anticipate the effects will be following the passage of these acts. And so part of the reason we had rather strong growth in stocks this year was due to anticipated changes in tax policy, as well as real and anticipated changes in regulatory policy.
Got it.
So the degree to which that has caused people to see their wealth rise and act and spend on that's helped the economy. But that's not the only factor behind the growth in stocks. We see stock markets rising throughout a lot of Western nations by just as much, a little bit less, or even more than in the U.S., and their impact, the degree to which they're impacted by U.S. policy is sort of limited. So I think there's other factors behind that as well. But ultimately, that's the main way that I sort of see the president having impacted the economy is really through growth in the stock market and the changes of people who benefit from that in their behavior due to anticipated changes in tax policy as well as real changes in regulatory policy.
Right.
Other than that, most of the changes we'd expect will happen next year or the year after.
Okay, so we'll be watching.
Yes.
One industry that has been in a state of flux for quite a while is the healthcare industry. And last year we talked about, when President Trump came into office, there was a lot of talk that he was going to repeal the Affordable Care Act. And things have been uncertain ever since. Can you talk about how that might affect the healthcare industry?
Right. So again, there's some executive decisions that the president made that sort of reduced, are likely to have I would say a minimal reduction on the number of people who are receiving health care through the Affordable Care Act. But what's going to be more significant is the tax bill, the tax reformation policy, which is going to remove the individual mandate so that those who don't want to buy insurance aren't going to face a penalty for not buying it. So that's going to affect two people. Some people will choose not to buy health insurance because they are healthy and they're willing to take the chance
that they don't need it.
Yeah, they're willing to take the chance of that they won't need it over the next year, and so they aren't going to pay the premiums. And in many cases, they're probably correct, but some people might end up regretting the decision. But the other group is that insurance companies will respond to that by increasing rates on those they are covering. So if insurance companies they're smart, they're going to realize
they're business people.
We're covering fewer healthy people and more unhealthy people, and so the premiums will go up, and so that'll actually kind of cause the premiums to become unaffordable to some sector of the population. I don't know how many people that's going to affect. The estimates are very early. It is sort of in the millions of people, but I'm not sure that I have a lot of confidence in exactly how many fewer people will be insured because of that particular policy.
Right. It's hard to estimate, I guess, if we haven't seen what the reaction will be.
That's correct. So in terms of number of people insured, I would expect a reduction, but I don't know by how much. And that'll have an impact. I mean, the reason it's part of the tax bill is the federal government will end up subsidizing fewer policies because of that.
Right, right. Can we talk a little bit about the uncertainty as we're talking about the White House administration? There's been some uncertainty when it comes to trade relations. And I know that affects us here in the States. Can you talk about how that has affected our economy?
Well, again, just as with anything else that needed congressional approval or just Senate approval even, not much has happened. So most of the changes in trade policy have been just in areas where presidential authority is all that's needed. So one thing that happened pretty early on in the Trump presidency was deciding not to sign the Trans-Pacific Trade Agreement, the TPP, but that doesn't really change policy. They're actually just not signing on, and so therefore there wasn't any change in policy. And then other than that, the tax bill has a few provisions that tax overseas production higher than before. So if companies want to produce parts of their products or their whole products in other countries, they may have to pay a higher tax to have those products shipped here and sold here. I don't know the fine print on that yet, so I'm not sure how many businesses it'll affect. But ultimately, they'll discourage some overseas production that's occurring now. Most of the rest of the tax bill, one of the bigger issues is sort of whether companies can claim profits in other countries that they maybe will have to claim here. That isn't actually going to change what's produced in one country versus another. It'll just sort of make a U.S. claim on taxing those profits more.
Okay.
So as far as trade, it is mostly talk at this point. We aren't very far along in beyond talking. So new policies regarding, say, NAFTA or trade agreements with other major trading partners.
Got it. Okay. When we take a look back here locally at the Dayton region, at the start of 2017, we talked about a handful of industries that maybe you expected to make a difference on the economy. You mentioned, we talked about healthcare, transportation, warehousing, and wholesale, and then supply chain manufacturing. Can you give us an update on how those industries did in 2017?
Yeah, so the healthcare continued to grow, added a little over 1,000 jobs again. It seems to be a steady performer at between 1,000 and 1,500 jobs per year. I expect that to continue. A lot of that's really driven by demographics, just the fact that the population is aging, and there is then a resulting increase in demand for healthcare services. So
right.
I would expect that to continue just as the population's mix of old to young continues to grow. Transportation, warehousing, and wholesale added really only 100 to 200 jobs last year, so less at the low end of what I would have expected, which would have been maybe only a few hundred more.
Okay.
So again, I'm kind of hoping or sort of expect that they might add more than 100 to 200 jobs, maybe a little bit more like 300 to 500 jobs next year, but sort of at the low end this past year. Supply chain and manufacturing, as I mentioned earlier, added more jobs than anticipated, basically about 1,000 plus jobs to that broad industry group. Hopefully that'll happen again. I think some of the policy changes that we're seeing might allow that to occur again this year. One thing to realize about the policy changes, they have to be implemented or sort of phased in. So even the tax changes won't all hit everybody on January 1st.
Right.
They'll sort of be phased in over time. And that's true of trade policy changes. So even if trade policy changes next year, it won't hit the economy immediately. So
right.
These things are all sort of gradual.
Okay. And of course, we've seen warehousing and supply chain manufacturing. They've got a pretty good hold here in the Dayton area. So those are, well, and of course, healthcare. Those are
right.
industries we watch very closely anyway. So you get an A+, I think, when we look back at 2017 and your predictions. Can you give us your predictions for the industries that will really have an effect on our region in 2018? Yeah,
so I'm still hopeful on professional and technical services. It was up about 600 jobs, a little bit less than I had anticipated, but those are high-paying jobs that support defense and support other tech companies in the area or include tech companies in the area. So I'm optimistic that they'll grow. That's an area that's growing nationally, and we're not, even though we have growth, this region isn't keeping up quite as much as we might hope. But I do think there's potential there. I mean, that's sort of where new technologies are emerging and a lot of job opportunities. The United States is a leader in that industry in the Dayton area. The companies we do have are among the leaders. So I think there's some promise there. As I mentioned, I'm hopeful that manufacturing will continue to grow. Defense, let me sort of jump ahead a little bit, but I do expect that there is increased defense spending. So I think that defense-related industries, private industries, will also benefit from increased defense spending.
Okay.
So I think there'll be growth there. Other than that, let me look at my list here. Oh, leisure and hospitality, which has been a steady performer, also adding about 1,000 jobs a year. But I think that's going to continue to grow as long as the economy is growing. Right.
That's usually an indicator of how the economy is doing overall, right?
That's correct. So those are sort of sort of luxury services. Those are sort of non-necessities that people pursue. And it's everything from fine arts to going to movies and bowling and eating out and staying in hotels. And so that entire broad industry has been growing steadily in this region, just as it has nationally. And you're right, as the economy grows, that industry does fairly well. So I expect that one to grow too. So those are the areas where I expect growth. Okay.
You mentioned defense, which you said you were jumping ahead a little because we can't end this episode until we talk about Wright-Patterson Air Force Base. Huge impact on our region, nearly $4.5 billion economic impact on the Dayton region, but it relies on federal funding a lot. So can you talk about what you expect for 2018? Any changes with Wright-Pat and those defense companies that support what's going on at Wright-Pat?
Yeah, so I'm kind of optimistic there. Again, the changes in spending won't impact us like in the first month of the year, but I think over the year, some of the increased defense spending in the budget, in the federal budget, will filter to this area, and it'll be a combination of Department of Defense, employment, so federal employment, as well as employment with contractors that are surrounding the base. So I expect growth there. One thing that was interesting for me to learn in the last couple of months is technology jobs, engineering and other similar positions. The Air Force Base, Wright-Patterson Air Force Base, is finding that it's taking longer to fill some of those positions than they hoped. So I think there are good opportunities there. And so that's an industry that might be held back more from the supply side than in budgetary shortfalls.
Interesting. So people are looking for a career.
Right. Think about the base. Right. That's exactly right.
We typically end with a very important point, which is how does this affect the households, the everyday consumer, and the amount they have to spend on everyday life necessities. What do you expect for the coming year?
Well, I think households should be comfortable with the idea that employment growth will continue, that the economy is likely to continue growing. So I expect employment growth to probably be a little bit above this year as the new federal budget with the tax cuts sort of filters through and has its impact on the economy. Higher pay on average. It depends on the occupation, of course. So some occupations will experience higher pay increases than others. And just as the tax bill is going to affect different people differently. And so I think everybody has to look at their own situation. The better educated and better skilled workers are, the better off they'll be. The more secure their employment will be and the higher their pay will be. And the more pay growth they should expect, or wage or salary growth they should expect. But I do expect that even in occupations with lower skill requirements, there'll be continued job growth there. So the tax cuts, I think people should be aware that the biggest effects will be in the early years. It won't be in the early months right away, but the tax cuts will be sort of strongest in the next couple of years, and then sort of weaken as they're pulled back unless there's some further legislation. And so those cuts will be less and less. But everybody needs to sort of look at their own situation, because I think from everything I've been reading, some people will face a tax increase actually. Right. So people have to sort of look that up for themselves and see how that phases in. The one thing to watch out for, I think, for the economy is the stock market, which has experienced really strong growth this last year, and whether that's sort of going to plateau or even decline. Right. And so that could have the exact opposite effect to that I talked about earlier, where it would cause people who hold a lot of equities in their stocks to not feel as well off, and cut back. Not so happy when they get that 401k and cut back on their spending to some extent. So that is the one thing to be cautious about. But overall, I think that we should be fairly optimistic about the economy, and that I would encourage people to make sure they can continue to pursue higher skill levels and education, and feel pretty comfortable about where the economy is right now. Excellent. Well, I am glad to have you here with some good news again this year, because I don't know if we're going to invite you back if you have not so good. Just kidding. It's always good to get an update, and we thank you for your time and the research you put into this and sharing your expertise with us. I know our businesses, it's important to them to know what they can expect for the coming year when they're looking at how they're going to divide up their resources and planning ahead for the year to come. So thank you. I'm very happy to do it. Absolutely. Thank you for coming. It's always fun. If you would like to see Dr. Traynor's predictions for 2017, you can watch last year's episode on our YouTube channel. And of course, the Dayton Area Chamber of Commerce, you don't have to wait for the episode every year, because we also have economic data available for you on a regular basis. Dr. Traynor, actually, we confer with him and others to get you those numbers. And in fact, our 2018 Economic Outlook will be available in early February of 2018. Both in print form and our newly redesigned DaytonChamber.org. And you can also find our monthly economic indicators. Those are posted, released every month at DaytonChamber.org. That's done in partnership with Wright State University Center for Urban and Public Affairs. So we thank them for their help. I'm Holly Allen, Director of Marketing and Communications. Thank you so much for being with us. Make sure you head out and follow us and like us on Facebook, LinkedIn, and Twitter. You can get more information there. But in the meantime, stay tuned for a message from our President and CEO, Phil Parker.
The program featured our annual tradition of researching and discussing what our team of business and economic experts feel will play out in the new year's economy. For many years, the Chamber has asked our Volunteer Research Advisory Council to weigh our past trends and input as much predictable influences into the mix to determine what our region's economy might experience over the next 12 months. The Council has once again reviewed the data, and today's program gave their spokesperson, Dr. Tom Traynor, the chance to share with you their thoughts concerning our economy. It appears to me that the one key word is steady. We have slowly come out of a recession almost a decade ago, and our growth in employment will most likely be 1 to 2% in 2018. Some industries may grow even faster, like healthcare, logistics, manufacturing, and home building, if we can keep up with the workforce demand. A strong stock market, low rates for capital, less onerous regulations, and business-friendly tax reform could stimulate our regional economy even stronger than predicted. The first quarter of 2018 will be a great indicator for the rest of the year. So stay tuned.